Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us at the MarketSite studio in Times Square, New York City, we have Kavita Gupta. She's the founder of the Delta Blockchain Fund. We're going to talk about the crypto winter and proposed regulatory framework. It's great to have you with us, Kavita. Welcome to Trade Talks.
Thank you so much, Jill, for having me.
Do you expect more collapses like Terra, Celsius, Voyager? What is the next shoe to drop in the crypto space?
It's very difficult because, yes, we have covered a big news about shoe dropping, but also the latest news today was like that Celsius actually have paid over $800 million back on chain for its deficit to other lending protocols like Aave and Compound, and like trying to reduce their footprint for having a cascading effect. So we're also going to see a lot of market people realizing how to take care of it, how to have merger and acquisitions, how to get out of it. Like BlockFi has announced they are not getting bought at 25 million. They're still functioning. People's accounts are safe. Nobody have like most of the people don't have problem with withdrawals or anything. So I think we are finding now a place where we're going to see a little bit of maintenance of the cascading effect of what has happened before. And then the market is going to assess what is left and can be taken care. This is very new and unique in the sense that this is the first time when something has failed, has a huge cascading effect because of a huge institutional multi-billion-dollar in the market. But we also saw a lot of crypto companies and Web2 companies like Goldman Sachs and other players standing up and saying, okay, how to take care of it so that it does not go down to a really bad recession.
So would you say that there's almost a silver lining to the crypto winter? I mean, a lot of the outliers seem to have been shaken out. Regulators are taking more notice. We're looking for a more mature path to move the asset class along. What are you looking for to determine that the crypto winter is over, and have we learned lessons from it?
I think for the crypto winter to be over, that's just not dependent upon crypto crisis or other things, right? It is a big asset class today to have social, economic, political, mainstream economy to have an impact. If you're going to continue to have a war, if you have an unstable governments, if you have elections, like anything which impacts stock market is also going to be a main component on crypto, positively or negatively. So I feel like silver lining in the sense that there's a breathing room for people who were thinking that all their money has gone, like there are some space out there. But at the same time, Celsius is still getting sued by a bunch of people who were managing their money, saying they did not hedge it or there was something regulatory issues out there, which does make regulators to really stand out and start paying more attention to it, which we are actually seeing industry-wide. Anyone and everyone I know in the blockchain crypto industry is having conversations with SEC. But I feel like a balance is good. Does SEC, should SEC step in for retail customers? Absolutely. Should there be more transparency, taking care of precautions for retail investors that their funds do not disappear overnight, or at least they know the risk associated? Absolutely, 100%. But should there be an overdrive to actually kill the funds without really knowing it, or companies without really knowing if there is anything wrong? No. So I think a good balance, not a witch hunt, but also not letting go wild west, a balance between those two would be great.
It seems as if the industry embraced the Loomis-Gillibrand bill as a big milestone for the crypto industry in the US. Would you agree with that? Is that framework feasible for at least starting regulatory structure?
I feel like it's a wake-up call than a framework. I have not seen a framework right now, right? I've just seen it as a wake-up call for SEC to say, hey, this is something big. We need to spend more time on it. We need to understand it. We need to get everybody to understand and also see what can work or what cannot work, right? We have seen some DOJ cases. We have not seen some big announcements from SEC or CFTC or anybody, right? So I don't think there's a framework, but yes, it is a really big wake-up call, not only in US. I've been hearing the same thing from South Korean government, where Luna comes from, European governments, like how to protect your retail customers, especially non-accredited customers who may not know the risk.
Do you think we're going to need more robust market structure down the road, not just regulatory structure, but the actual market structure, the pipes underneath the crypto space?
I think this industry by itself has been growing. Like if you compare 2015, then 17, then now, we see a lot of like amazing companies with much more security, custody, and the product becoming more and more mature. We also see a lot of experiments which have been disappearing, getting hacked. Like there was a report yesterday by Blockwork, over $650 million has been hacked in just last quarter from different DeFi protocols because of lack of security or some issues. So we also going to see maturity from there. But technology industry and then on top of it, crypto industry has always been the industry which go push the envelope on the technology innovation, find issues with it, find some sort of like problems with it, and then fix it.
Right. Well, I mean, we saw that from past Bitcoin bear markets, the innovation and the new products come out have really been substantial for the industry. And I also think this last particular bear cycle, the fact that we're seeing legacy and traditional finance work more closely with fintech and blockchain companies, that's really what the encouraging part is here.
I mean, from Silicon Valley, you have some of the top companies embracing blockchain technology, whether it's for NFTs, whether it's for settlement or other things. Then you have Wall Street, which suddenly is like, we can also bail out companies and be part of those institutes, right? Whether it's stable coins like USDC or whether it's a DeFi protocol. So I feel like every time the innovation has been at the place where mainstream is part of blockchain and crypto industry in a big way, right? Like whether it is at the chain level saying, hey, now Disney is working with Polygon, or Instagram is going to do all its NFTs on Polygon, whether we are talking about USDC, one of the investors are Goldman Sachs and BlackRock and other people, as much as I remember. So we feel like mainstream is already part of it.
Right.
We just have not woken up to it.
I think what's most encouraging is how brands have embraced NFTs, not only to unlock special experiences for their customers, or this NFT allows you exclusive access to a limited edition product, but how it's actually a great distribution channel for them as well, besides your traditional marketing and ad spends. I think that really has been the institutional pushes, or what brands are doing.
Actually, it's been, you picked up a very good point, Jill. It's been unbelievable, the brands which we see coming in the NFT space, like White Castle, a burger brand, McDonald's, right? You're talking about a bank system creating metaverse for a consumer, like conversations. I feel like in fact, I myself have been surprised with the type of brands and the type of companies associating with it. From one side, you have Ferraris of the world coming and doing NFTs. On the other side, you literally have GameStop and like other stuff doing NFTs. I feel like every time we have a conversation about crypto, most of the people get stuck to prices. It is not a speculative part. The technology is the powerful part. Even at Delta Blockchain Fund, we only invest in technologies and the companies which are building these products.
Right, I mean, that's one thing that we always try to impress upon the Trade Talks audience, that the value part of it is a fraction of what blockchain technology enables. And we're not just talking about finance or the tech space. This can be deployed across every industry.
So you talk about supply chain of mining to clothes, to human rights, to everything. You talk about voters fraud technology. You talk about identity, your data, decentralized data. You're not carrying your passport or your driving license, having 20 copies of it every hotel, every country, every city, but having your unique ID, which is on blockchain and verified. So I think it's the technology power. Like, give it 10 to 15 years. Like today, you don't cover about what does database do or what does TCP/IP protocol does, because that's just now the piping of the infrastructure. And I think that's how the blockchain technology will be.
All right, Kavita, we appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.